More interesting top picks headed your way. We're going to start with Shiraz. You're in the machinery group.
That's right. Machinery that supplies to the restaurants. So
that make the drink he was talking about in the last.
That's right. More on the pizza and the wings side, but the drink is there in the restaurant as well. So it's Middleby Corp, a roughly $4 billion market cap machinery maker. That's the number one or number two supplier to the restaurants, whether the fast food or the quick serves. And we have Potbelly, the local company, coming out with the IPO. That's a client from Middleby. And a lot of the people like to play the restaurant space as this emerging market growth opportunity, whether it's from Yum or some of the other big chains, McDonald's, Burger King. That's one way to play the expansion of the chains in the emerging markets. Another and better and preferred way would be to play through somebody like Middleby, because Middleby is supplying to all of them. So irrespective whether a Brinker or a Darden has weak results, the odds are that the oven in the kitchen is supplied by Middleby. I was trying to look for an earnings miss on the chart, and went back to the middle of 2011, and then I stopped looking. So they haven't missed a quarter. Q2 was extremely good. Late last year, they came out with a little bit of an acquisition to play on the housing recovery too. So a little bit of ovens for the momentum on that side. But overall, a commercial kitchen on the hot side supplier with very strong momentum, a good combination of organic growth, both here. About 70% of sales is domestic, North American, about 30%, and growing is international. So a very good play on the improved outlook for the restaurant space, both domestically and internationally.
All right, Brian, you've got a business services company.
Yeah, but it's time to make the donuts, right?
Yeah.
Middleby, the supply Dunkin'?
Yes,
Maybe
yes, they do. Yes, they do.
Yeah, Dunkin' also uses Wageworks, which is my pick, and this is the company that helps Fortune 100, 500, big and small companies with their health benefits. So when you have the health savings plan or any product like that the company has for their employees, Wageworks is the company that facilitates that. Now, it helps both the employees because it helps save them money, and it helps the employers. It helps save them money as well on a per employee basis. So the average on the health end side was $64 per employee per year for the employer. That was the savings. Per employee, it was something like $490. So there's great benefits. You can see like there's kind of a win-win proposition to bringing in Wageworks. They also have about 30% of their revenue coming in from the commuting side. So kind of like the CTA here in Chicago, we use that pass. They facilitate that. Also the MTA in New York City, several other parking concerns, general parking places like that. So it's taking that money that would come pre-tax, getting it right onto a card or right into an entity like that to make sure that you get a service. So it's pretty well insulated from downturns because you've got great visibility in this business. It's going to take a company about 6 to 9 months to say, hey, we're thinking about canceling our relationship, so we're going to have to wind it down, find a new service provider. So they got great visibility going forward. Stock really ran up recently when it made a breakout over $50, which is like a technical move. Ran up to just about $57. Has recently now pulled back to right around that $50, $51 area. I think it's a great play for this week and beyond.
Okay, and Eric, you've got the regional bank ETF.
That's right. From State Street, the symbol's KRE, and this ETF holds about 80 securities in its basket. Uses the equal weight approach, so you get about 1.3, 1.5% in each of the stocks. And this has been a really strong pick over the last couple of months as interest rates, the spread kind of widen. But obviously, with the lack of taper here, we saw a big sell-off in these names in the last couple of days. However, the rates really didn't move down that much, and we're going to see a taper eventually. We can argue all day about when that's going to be, but eventually taper is going to come, and rates are still pretty decent spread compared to where they were before. So this could be a pretty solid play in the financial space, especially if you don't want to look at some of the larger banks, which have seen, you know, trading revenue issues, some big fines recently for the likes of like J.P. Morgan and whatnot.
Many big issues in the bulge bracket.
Exactly,
And central banks, yeah.
and the U.S. economy is really holding up quite well. So it could be, you know, a good idea to look at some of the smaller players in the space. This is a great way to get diversified exposure. So this could be a great pick for investors over the next couple months. Also has a Zacks ETF rank of 2 or buy. So this could be one to look at if you're taking a look at the financial space.
But no taper, though, right?
No taper.
Don't start that again. Don't forget, if you go to Zacks.com, you can see more stock picks and stock picking strategies, and check back often because they change often with everyone here. I'm Terry Ruffalo.